Toledo Biz TV Shows proudly presents this episode of Directions for a Better Way to Bank with your host, Business Lending Manager Pat DeCesar.
Hi, I'm Pat DeCesar with Directions Credit Union. I'm glad you can join me today for my show. In my past show, we talked about how to prepare a loan package and present it to a lender when you're looking for a business loan. Well, what happens next? What happens after you give the package to the lender and you leave? How exactly does a bank evaluate your loan request? That's what we're going to talk about today. We all know banks are in business to loan money and have it repaid in a timely manner with interest. So that's pretty much the bottom line. As we've also discussed in our past shows, your cash flow is very important. You have to have sufficient cash flow to repay the loan. But in addition to the cash flow, there are a few other elements that the banks concentrate at when they're analyzing your request. So we're going to talk about them. The first one is your credit. Both your personal credit and your business credit is very important. Your personal credit will be pulled from one of the three credit bureaus, and your business credit will be pulled from a company called Dun & Bradstreet. It might help if you know what your personal credit score is before you go talk to the lender. The second thing the lender's going to look at is the collateral for the loan. Lenders want to file a lien against your assets, whether it be commercial real estate, your business assets, which is all of your equipment, or even your accounts receivable. That's what a lender's going to look at to secure their loan with. The third thing the lender looks at is your capacity, your ability to pay. How have you paid your past debts? How are you paying your current debts? And how are you going to pay your future debts? And then the lender's also going to look at your knowledge of the business, your experience in the industry that you're in. And of course, they'll look at your business plan and your succession plan too. Now, another thing that lenders look at, and we've talked about this, is your cash flow. But let me give you a little bit more information. Typically, a lender will look for your cash flow to be 1.25 times your annual debt service coverage. So I'm going to give you a quick example. For simplicity's sake, let's say your monthly payment on your business loan is $500. Times that by 12 months, that's $6,000 a month. So your lender is going to expect to see a minimum of $7,500 in free cash flow. Of course, the more you have, the better it is. And the last element that a lender is going to look at when they're analyzing your loan request is your character. This can be very subjective, and it's often misunderstood by a lot of business owners. But this is where a well thought out business plan will really help you. Lenders are going to look to see if your business is trustworthy. Are you committed to growing and expanding? And is the information that you provided in your business plan consistent throughout your loan package, and how easy is it for them to verify? And by the way, if a lender does ask you for more information when they're analyzing your loan request, provide it to them as quickly as you can. Lenders get very frustrated if they have to wait too long for additional information, especially when you call them the next day and want to know if they have an answer for you. Well, that's my show for today. I hope you can join me next time when I'll continue to talk about the world of business lending. For more information, give me a call. My number's on the screen, or visit our website. I'm Pat DeCesar with Directions Credit Union, and remember, you set the direction and I'll help you get there. Bye.
Toledo Biz TV Shows thanks you for watching this episode of Directions for a Better Way to Bank with Pat DeCesar. For more great information, visit Directions Credit Union at www.directionscu.org. Also browse the other shows found right here at Toledo Biz TV Shows.